Hello there. Great evening, Forex traders around the world. This is Mohammed Kande coming at you with a weekly analysis. I wanted to do a quick weekly analysis on Great British Pound, Japanese Yen. I'm really excited about this pair. Here we are mid-month now, and I wanted to kind of take a look at it. It had been very crazy in the second part of the month, and the second week of the month. The pair was pretty crazy to me, but I think now we have an idea of direction, and I wanted to share that with you guys. So the market had been in a downtrend for quite some time, right? So if I pull my trend line right here, you can see that the market had been in a downtrend for quite some time, right? Since February of 2018. But I believe that this candle right here, this pin bar right here, this rejection candle right here, right, at a major structure area on a monthly, weekly, and daily, right? If I extend this area right here, you guys can see, right, major structure area right here, right? So market came to this area right here, and price got rejected from this area right here. Strong, right? Strong rejection from this area. The market pulled back. So I believe that we are in the beginning of an uptrend now, and of course nothing is 100%, but let me go through my analysis with you guys and share with you what it is that I think and what I believe, right? Number one aspect of technical analysis is that you have to be extremely strict and rigid in your rules and flexible in your analysis. You have to be absolutely flexible in your analysis because at any time anything can happen to change the trajectory of price and to be in a completely new trend. Okay, so now on the monthly chart, I see that the market came back to major levels, right? Market was in this area right here for quite some time, right? And then broke it, and of course came back to retest it here one time, got rejected, retested it again two times, got rejected, third time's the charm usually, retested it again, deep retest, but got rejected. Market still closed around this around the structure area, and then the market started to break this monthly trend line, right? And this will look a lot clearer as I go down on the lower time frame. But when I'm doing my analysis, I always like to start on a monthly to have an idea of what is the overall direction of the market. The overall direction on the market on a monthly chart lets you know where to take a position. The trend is your friend. So whatever the monthly chart is telling you, that is primary, right? And if we go down to the weekly chart, just to take a look, right? You see it a lot clearer now on the weekly chart. So let me fix this trend line right here, right? You see it a lot clearer on a weekly chart, right? So what did the market do? The market came back to this area right here, right? The area that we had marked up, right? Market that came to the area, right? Major structure area, got rejected. Came to it again, got rejected. Came to it again, got rejected. And then boom, went across it, right? So now the market came up, came down into it, got rejected one time, came down into it, got rejected another time, came down into it, and got rejected again. And the market kind of broke this trend line on the weekly, right? And usually, whatever is going to happen on a monthly, you're going to start to see it manifest on a daily, and then on a weekly, and then on a monthly. So that's why it is very important to start on a monthly, so that way you can kind of have an idea. Because if you look at the monthly and you see the trajectory of price, you see which way the market is going, you can catch it earlier on a daily. What oftentimes a lot of traders do is that they're doing analysis on the H4, on the H1, on a 30-minute chart, on a 15-minute chart, on a 1-minute chart. That is absolutely crazy. You doing analysis on the 1-minute chart, 5-minute chart, 15, 30, an hour chart literally just destroys your account, because you don't know what is the overall trend. So you may be trading a minor pullback thinking that you're following a trend, right? And you get taken out just like that. But when you start from the monthly, it gives you a better idea of what's going on in the market. So as we can see on the weekly chart, right? Again, I believe that this downtrend that was created right here has been taken out, right? And we see it a lot clearer on a daily. Now let me go to the D1. This is the beauty right here, right? So if you guys take a look on a daily, and let me take this one out over here. If you guys take a look on a daily, right, the market pushed down the structure, right? Major structure area, market pushed down over here, got rejected, right? And the first impulse leg, right, lets you know that the trend is getting ready to change, right? This is the first impulse leg right here. First impulse leg, right? But I'm not trading that leg because I'm not 100% sure. It could be a pullback because the market pulled right back into structure right here, right? Which would be about the 78.6 of this leg if I were to do a fib on it, right? So first impulse leg, market pulls back to the 50, right? Look at that. Market finds strong support at the 50 area right here, right? One push, two push, third push, still can break it. And then the market did what? The market created a higher high. Now we are in an uptrend. That's all it takes, guys. Okay, so let me repeat this again. This is a nice little token for you guys out there. First impulse leg, pullback, higher high, right? We're in a new trend. So I was expecting the market to pull back over here, but the reason why this got disrespected, right? And I'll tell you why. The reason why the market didn't pull back that deep is because of this trend line right here, right? Look at the trend line. The market broke the trend line with a big bullish engulfing that closed. Look how this engulfing closed, right? It closed bullish with no wick. Market pullback, tap the trend line, and created this leg right here. And this looks like a rejection candle, but I believe that this market is going to go up. So this is what the market did right here, right? The market came up, right? Came back down to retest my trend line, and now the market is going up. And I believe that we are now in an uptrend. And I could be wrong, right? But that's why you have to follow your analysis. You know, I follow my edge. This is my edge. This is one of the strategies that I trade. You know what I mean? If you want to call it that. Simple price action, right? Look at that. Where did the market find a little bit of pushback? At the negative 27 area. That's why I'm not really too worried about it. The market broke the trend line, right? And I'm looking for the market to continue up higher, right? So that's the quick little analysis that I have on Great British Pound Japanese Yen. And I want all the traders around the world who are watching this video to understand that you don't need 100 million indicators on your chart to be successful in this market. All you need is price action, support, resistance, structure, trend lines. That's it. Makes life absolutely easy. So happy trading to everybody. I hope that everyone takes advantage of this pair this week. And I hope that we get some massive pips. And just on the H4 real quick, let me show you guys what I'm looking at over here. Excuse me. So if you guys take a look at it, it's a lot more, you can view it a lot better on the H4. But I actually got into this market over here. Let me show you guys, right? The market went over here, right? I actually caught this pullback right here. It wasn't a deep pullback, but I caught this pullback at 146.43, right? And then the market went up. I caught a second entry right here at 146.76, I believe. Caught a second entry. I'm sorry, 146.86. I caught a second entry. So I'm looking to ride this pair up. And if you have any questions, don't hesitate to put it in the comment section. Don't hesitate to ask me. I'm here to help any and everyone who's looking to be helped. Happy trading, everyone, and let's get some massive pips this week.